Hi, everybody. It is Wes with Pikes Peak Trades, and I'm very excited to be giving this weekend video update after a really tough week in the markets. I think everyone would agree. If your P&L was red, you join the club. If it wasn't, congrats. Even if it wasn't, you probably felt a little emotionally beat up. It was a tough week out there. So it leaves us at a really important and I think a critical place in the market structure. So from an Elliott wave standpoint and looking at some really important technicals that I follow, we now have to entertain the possibility that a significant intermediate term top is in versus are we going to see another bull leg after some of these oversold conditions are able to be worked off? Are we going to get a big bounce? And that's what I want to take you through. Now, because of that in the big picture and how important that is, this video has many less tickers. And the reason for that is I think it's most important that we decipher first the general market direction, because if we've seen a top and it's going to go down, probably even your favorite proposed triple bagger is going to go down too. So if we get the resolution upwards, I'll do my best throughout the week to get some of those chart updates out. But for now, we're going to focus on the main indices and ETFs, and we're going to focus on the big five. Which big five? The five most heavily weighted stocks in the S&P, because as they go, I think we'll see the general market go. So you should know what those are. Those are Apple, Microsoft, Amazon, Facebook, and Tesla. In addition to here, the SPX, the QQQ, and of course, for broad market coverage, IWM and XLF, also because they have really interesting things to show from a charting perspective. So I've got the monthly candle circled here on the S&P 500. And is it a shooting star candle? And if we search for, and I really like Investopedia, the definition that I have highlighted, first of all, it must appear during a price advance. Well, that's absolutely true. Is the distance between the highest price of the day and the opening price, now this is not daily, this is monthly, but it transfers. Is it more than twice as large as the shooting star's body? There should be little to no shadow below the real body. Okay, so if we just focus on the shadow part, there's really no shadow. We saw an open and a close very close together here within, I think, about $20. The other part of this that's important essentially is saying, is the width of the body of the candle, is it less than half the total magnitude of the candle? And if you take the high minus the low, okay, you find that difference, you take the difference of the body, and yes, it qualifies. It qualifies as a shooting star candle. Okay, so now, of course, it's not actually a shooting star unless it's confirmed by the following month's price action. So I want you to point this out because we do have potentially a topping candle in place on the monthly. Okay, now looking at the big picture Elliott wave structure, I've been tracking this and it's been tracking really well since the March low. What I have us in is a cycle 3, which is the most bullish Elliott wave cycle. And I have us still, as of now, still within an intermediate 3 of primary 1. Now, those degrees might need to be changed, but for right now, everything is tracking, so it's going to remain that way. The question, of course, is, are we actually going to get the resolution through a third wave, a fourth wave, and a fifth wave over, let's say, the next maybe 15 months? Or is this first primary push up, is it actually done? And that is the most bearish count that I'm willing to consider at this point. Okay, if I take you into the weekly, you're going to see it is at critical lower support. Two reasons. Obviously, you see the lower black rail, but you also got to focus on how it closed just slightly below the 8-week EMA. Now, one of those closes might just be a head fake. If it happens again, we're going to be out of the channel, and most likely we're going to be challenging to the downside these other EMAs. So for the bull case, I think it's pretty imperative that Monday is a gap up and it goes the rest of the week. Okay, now, is there some ammunition out there to support that we might actually have a gap up? I want to show you something really interesting that caught my eye from a really good follower on Twitter, Charting Options. And I want you to take a look here at the NYMO. So we're looking at the New York Stock Exchange, the McClellan Oscillator. Not going to get into the calculation of that. It would be fun for you to research it if you're curious. Here's what I want to point out. I want to point out here that there is divergence. We have a lower weekly close, but we have a higher weekly NYMO. And that is also true. Let me just focus right there. That is true for that final week. Okay, that was in January. That was on my chart. If I go back to our S&P 500, that was the location here at what I am charting as a minor 4. So that is significant. And from a weekly standpoint, that kind of divergence, that probably will be enough to propel the market on this last leg. And that is where I stand currently until the market proves that it cannot sustain a bounce. And I'll talk about some of those levels to keep very, very close eyes on all the way through these charts. Okay, so crucial support on the weekly. We do have some ammunition, we think, for an oversold bounce. And let's take a look at some more detail as to what I'm charting internally. So I'm charting that low as a minute 2 low, which means there is still a very, very bullish wave 3 yet to come if we set that important low. Okay, now we've got to start talking about some of the technical damage that's done. We have 2 consecutive daily closes, each below the 8, 13, and the 21 EMA. Let me state that differently. It is the 8, 21, and the 34 EMA. That is technical damage. And that is one of the big reasons, again, why I have potentially that primary degree top. And also you're going to start seeing, now that we get down to the daily charts, you're going to start seeing an intermediate top, something that is more bearish in the short term, but would eventually resolve itself into that primary one top that I was showing on the monthly and the weekly. Okay, so what has to happen? Well, you need to think of these turning over moving averages like water flowing in a river. Right now, price is trying to swim upstream. It's trying to swim against the current. It takes a ton of energy to do that. In order for these to be recovered, there's going to have to be a very, very enthusiastic buy early next week. It's going to have to be accompanied with breadth and volume in order to get that back above these moving averages. And when we get into the rest of the individual tickers that you see across the top of my window, you're going to see that some of those tickers, it's going to take even more energy because of the degree to which their MAs have already rolled over. Okay, so now let's dig into the details of what could we be looking for in the short term. And you're going to see a lot here, but this is important. If you don't like the multiple possibilities, then to be honest, Elliott Wave is not for you. Elliott Wave is not about certainty. It is about possibility. It is about probability. And I will always show an alternate to represent that fact, that no wave count I give you is 100% certain. Now, the ones that I present in my black color are the ones that in my mind I judge to be the most probable. So you are still seeing here what I think is a pretty fun looking short-term pattern of an inverse head and shoulder. We did get a higher low above this spike low. And if that plays out along with that potential divergent boost from NYMO, we could get a very, very exciting rally early next week. Okay, now notice that target. That target is going to have to break some significant overhead resistance. So let's pay attention to some of these numbers. So here is my 200 period 15-minute moving average. That's essentially like a 2-day moving average. It has to conquer that and the rail. It's got to get above 3,900. And if I take you back to the daily, where is that MA cluster? Right over there. That MA cluster is in the 3870. So it's got to get to 3870 and above, but then to really push through the short-term resistance, it's just got to keep going. And because I'm counting this as a nested 1-2, we should see enthusiasm if the bull count is going to resolve. But take a look at what could also happen. And it's important to start training your eyes to this, because even if we do get the bullish resolution for the final leg through spring and summer, that is my primary count, even if we get that, at some point in the spring and the summer, you're going to have to start getting ready for places that I can identify that you need to get defensive or possibly even tactically short. And here's one. This is an area that if it just peters out on Monday, this is an area that I would say you need to really start being cautious. Would you sell that into strength if you see it run out of steam? I would. I would also at that point start to consider some tactical shorts because of the extent of the down move that is possible. This gap right here in the S&P that goes back into early January has not closed. It's got to get below 3773 for that to close. We've already seen this past week Apple and Amazon with significant gap fills. And I'm actually going to show you that there's maybe more they still want to fill. Here's the short-term one in SPX. Okay, so we've got these possibilities. If it's going to go bullish, we've got to see enthusiasm. If we see a stall in the 3875 to 3900 area and it starts to roll back over, and especially if it seals the deal with another close below those daily MAs, I think we could go much lower for the week. So let's get now into tech. So into the monthly on the Qs. We already reviewed the shooting star candle, and there it is again. And in my review of the monthly candles of Qs, I've never seen one quite this bad. And that's pretty concerning. And I'm also going to suggest this isn't the only ETF that we see this. So, again, we consider the possibility of the red bear count. Now, based on how Qs are charting by degree different than SPX, this one could find some support. This one might not go nearly as low. Maybe the big selling leg or one of the big selling legs is over, and at that point the selling might turn over into the S&P. That's pure speculation, but at this point I have a longer term rail and some monthly moving average support here in the 270 to 290 range if we see it resolve bearishly. But if not, then we need to recover, from this monthly candle. And we've got to start moving up in the progression of this final minor 5 wave up here into my P3 target. I'm not as enthusiastic about tech here just because of how they've been leading the selling down. I could absolutely extend that FIP. And the next one would then track possibly up to about 400. I don't have it on the chart. I'll put it on the chart if needed. If we get the breakdown, you're going to see, just like SPX, you're going to see this lower rail start to fail. We got the weekly close below the 8 and the 13. So that's the warning shot. If we don't recover immediately, it's time to start looking for something that's going to be a little more painful. Okay, taking that into our daily look. So on the daily look, again, you're going to see the importance of that rail. And my suggestion that if we get bearish resolution, that a bounce is going to be rejected. Okay, so what I'm projecting is whether it's bull or bear, that Monday and maybe even possibly Tuesday are up. So I did actually buy the close. I did not buy it with my full account balance. I did put out a decent amount of money into some leveraged bull ETFs. I was shy about call options. We had seen so many failed patterns last week that I just wasn't quite willing to put the amount of confident leverage on that I usually might if I know we're in a sustained uptrend. And we're going to see if we get that bounce. Just like SPX, will the rejection occur at its moving average cluster? And that would be in the 320 to 325 area. So the short-term count also is communicating that possibility that what we just had was from the proposed top, a 1, 2, 3 down for the bear count, and an AB4 up. And here is, again, another big piece of the potential resistance on the 15-minute chart. I actively watch this and look for signs of resistance and support with this MA. It is a really good trend following tool. Now, just like SPX, if we're going to resolve bullishly, I think we've really got to get last week erased quickly from our memory. And it needs to move up over this moving average, and it's got to start challenging back into this broken bull channel. And I would say for that leg, if we get enthusiastic buying on good volume, we could see the Qs back to 330 pretty quickly early in the week. Okay, now before the big five names, other really interesting things. So take a look at the monthly here on IWM. This candle right there actually does qualify as a shooting star. Barely. The width of the body is barely less than half the total magnitude from low to high. Okay, I should say from open to high as it's calculated. So again, the potential of a top. Not saying it is. I'm just saying the potential is there. If it is because of the strength in IWM, I don't have it as quite a severe degree correction. I think IWM, it's just channeled so well, would find weekly support and channel support right around 200. Okay, so that's still painful, but that's actually just right around 10%, whereas I might be talking about maybe 15 to 20% in the S&P and the Qs. So let's take a look at the daily. We're holding the rail, but we did get 2 consecutive daily closes beneath the 8 and the 21 EMA. There's your warning shot. So have we had a character change? My suggestion is we have to quickly recover for IWM. We need to close above 222. Otherwise, it's probably going to roll over and target this maybe a previous breakout support area, maybe even a little bit lower. Into the short term. And again, do we get an inverse head and shoulder setup? Keep in mind, last week, these patterns failed. And in a character changed market, they will continue to fail. But if we've got that nice divergent low in place, we're going to blast right through this resistance, through this rail system, through the MA. We're going to get through this previous gap level, and it's going to start challenging its all-time highs around 230. Okay, XLF, also really interesting. Let me get you, that is the longer-term monthly. Okay, so the monthly candle, not a shooting star, but look at the perfect touch of this double rail. And it is very, very close to a potential topping fib for what I'm charting here as its very bullish intermediate wave 3 of primary 3 of cycle 3. That's why XLF has gone nearly vertical. It's in the most bullish Elliott wave part of its cycle. take a look at the weekly. This is not a good look. So you might call it a gravestone doji. If it was red bodied, you would, I think. Here it's definitely a shooting star. And again, confirmation on the week. Otherwise, a quick recovery. Like IWM, I'm not suggesting anything massive, but a return to some of these moving averages. It's been so far away from, for instance, here, this is its 13-week moving average, that returning back to it might actually be really healthy to gather fuel for the next big push up that I think would then arrive maybe in May, June for a top. Okay, slightly different degree than IWM, but we would be looking for a minute degree pullback. And I had tweeted this out on Thursday. We're finally seeing financials sell. And that would have been our clue that you needed to get defensive. They were the last strong leg holding up the market. And when they went, everything tumbled. Okay, so keep that in mind. If there's continued weakness in financials, the projection would be continued weakness market-wide. And into the short term, we're going to notice, do we need another gap fill? So this breakout gap, do we need to get an intermediate degree 4 down here to fill the gap? Okay, so really, really interesting things across the index SPX and these ETFs. Now we got to get into the big boys. So let's take a look at the very long-term chart on Apple. And I've circled 2 really back-to-back concerning monthly candles. And you're going to notice down here, it is on negative monthly divergence. That is how major tops form. And I have to give the possibility that this could actually be of a supercycle degree. So it's an interesting inflection point that we're at. And moving into a more zoomed in version, here is the weekly. So we have what looks like a failed breakout. We caught support at the 34-week EMA, and that's where I'm counting this as a 1-2. And just like I've suggested, Apple's got to get back out in front, and it's got to enthusiastically embrace this next bull leg. Okay, otherwise, on Apple, the move down doesn't look very fun. It could be a quick flush right down to the 200-day SMA, which would be kind of the last line of support before the red count takes over. My suggestion again on the short term is that we'll probably see, if that is to happen, that we'll probably see a moving average rejection. And I've got that circled right in here. It's the same area as the cluster of its daily averages. If you are looking cautiously at being able to exit into strength, if we see this area in Apple, right in here, the 126 to 128 area start to roll over, that's our sign to be cautious. The bull case, this potential 1-2, it needs to be bought with enthusiasm. Okay, let's move to Amazon. So we'll take a look at a couple different views. The long-term picture on Amazon, here with the potential of the symmetrical triangle, which is the Elliott wave count. We're waiting for resolution. Right now it's sitting right at the lower line of that triangle. Just close below, however, it's 8-month EMA, which from a technical perspective is significant. So what would be the proposed count if the top is in? It would be painful. It would be either a primary degree if we completely lose this support, and you're going to notice that support is at 30.48 there on the monthly. Oh, I'm sorry, I made a mistake. I said it closed below. It did not. That's on the monthly. It's holding the monthly 8 EMA, which is crucial support. 2 possible tumbles. To double bottom here against this price back in September, or to tumble all the way down in a primary correction. What do we need to see from the bull case? Well, we've got to see a recapture of this symmetric triangle, and we've got to see a breakout. Very, very simple. It's just hugging right here a parallel channel from its previous two tops, just right above its 34-week EMA. It's significantly below its 8 and its 21-week. If you haven't been concerned going into the video, at least I hope this perks up your antennae. You need to be ready for whatever this week brings. Okay, now, what could we see? What's going to help us decide here? Again, both of my projections say that this is actually a divergent low, that we're going to get a bounce. Okay, so of course we have to, that's going to lead to some uncertainties. How do we play that? Well, with Amazon, when Amazon has got into these levels, it has dropped off. What would happen most likely is a move up to find support and then the push through with some strength. If it moves into this area here where the fibs and the resistance pivots are and stalls, I would recommend, if you're in Amazon, especially for anything short-term options, you definitely take some profits. Okay, we've got 3 more to get through of these big boys. We need to look at Facebook. So again, Facebook, kind of this flat-bottomed triangle look. Interesting monthly candle. If you're bullish, you're going to say that interesting monthly candle is an inverse hammer. Okay, so Facebook could have potentially put in its first cycle top. The primary count is that we're still looking for one more bull leg up. Now, a 1-2 count for this low. And what we're looking at here on the weekly is are we going to move down and challenge again this potential double bottom area? There's a slightly lower fib right here for a wave 4. Otherwise, a pretty painful move in the red. And you're going to see when I get to the daily, I'd mentioned that there were some other names with gaps yet to fill. And here it is on Facebook. It's July earnings gap right down there at about 234. If it wants it, it's in the bear count. My suggestion here is, if the market wants to tank, it is in the Elliott wave counts to do it. This has been a long, drawn-out, sideways to down move, and typically these resolve with a flush. So that's what I want us to be on guard for. Also take note of that daily potential shooting star. So there's a lot of really, really interesting technical information out here. In the short term, again, you might not care at all about Facebook, but you should care about its weighting for QQQ and SPX. It needs to break through the 265, 266 pivot with enthusiasm. That's how we're going to be able to say early in the week, we think we've put the low behind us. Okay, into Microsoft. I've had to adjust some things significantly on Microsoft. Microsoft has actually been difficult to count from an impulse perspective for the move going all the way back from early September, which when you're having trouble counting something impulsively within a leg of the market that you think should be very bullish, that in my mind as a waiver raises some red flags. I've adjusted the Microsoft count to be more similar to Apple, that it's possible it's put in a very significant cycle top. Also possible, like Apple, that it has a different topping pattern. However, with Microsoft, due to the really choppy overlap of this, the lack of enthusiasm that I've perceived, it could actually go much deeper. So if we get the bull resolution, this count has been tricky. I think we're looking at an ending diagonal from the low back in September. So a 3-wave move to 1, a 3-wave move to a failed flat 2, Failed flats typically resolve quickly bullishly. That would work to a 3-wave move 3 and a 3-wave move down to 4. That's my primary count. That support is held here on the weekly at the 13-week, slightly below the 8-week, and we're going to see a 3-wave move up to maybe challenge, let's say, 270. Okay, now looking at the other options here for Microsoft, if we don't see that, again, I'm looking for rejection at the MA cluster. So when my primary and my alternate line up, this is a high probability play for me. This is why I went ahead and bought the close. And I would give the odds on a Monday bounce, I would give them at 3-1. I do think we see a Monday bounce. What I really want to point out to you is the significance of what it does at the resistance. Because look at how these have just tumbled over. And if it cannot resolve, I think we're going to see the flush. Okay, let's finish with Tesla. Tesla is the 5th weighted component of the S&P. Tesla, a terrible month. It loses potentially this rising wedge. It's down about 15%. This is a monthly engulfing candle on negative divergence. I really don't want to talk negatively about the market. I'm not a bear. People get hurt when the market sells off. I don't want it to be that way. Trust me. But I just have to present to you the evidence as I see it. I think if Tesla is topped, it's made a big one. And it could be of a cycle degree. We need to see immediate buyback towards this broken down rail into the 800s in order to overcome this. This is significant technical damage. Otherwise, we could see Tesla drop 15 to 20%. So on the weekly, we're just hanging on to mid-channel support just above the 21-week EMA. I would have that in a minor 4, looking for a minor 5. And just because of the uncertainty here around this, I'm not willing to put higher targets onto that yet for the bullish case. And we get in here to our daily and short term, and we're going to see potentially a bull flag. But as I pointed out, there were dozens of bull flags, symmetrical triangles, and pennants that I was looking to buy last week that all failed. So what's going to happen here? I think we do pop out, but what it does right at the top of the rail and against these MAs is extremely important. The 730 to 770 area is going to be decisive to try to tell us what's happening in the general market. Let me show you finally that short-term chart, and then we'll be done here. The red arrows say it all. Are we going to move up, attack, a slight consolidation, and get back into the 800s? That's what needs to happen. Or are we going to move up and stall, and is the red bear going to take over? And I think that visual for you there is a great chart to leave with your mind. That because of the technical damage that was sustained this past week, it is essential that we're on guard for possibilities that could involve more selling. You know, my bias and perspective is bullish first, and I'm presenting those to you clearly. I'm also trying to present to you the levels at which I think we need to be extremely careful. As always, I'll try to do my best to alert when I can, but you guys know with the difficult time change to the markets and having a young family, it's tough for me to do that in a timely way. I hope that you've got enough eyes on visuals, that you're watching some technicals and price action, that you're going to make some great decisions this week in the market. Even if that means sitting in cash, that actually might be a winning position, as it actually was for me for much of this past week. I hope you have a wonderful weekend. As always, thanks for the likes and follows, and I'll check in with you guys soon.